Can you hear me now? I think it's fixed, but yeah, let me know in the comments if you can hear me. Yep. Okay. Okay. Seems that the sound issue is fixed. So okay, let me start over since nobody could hear because of this issue. Um, um, my name is Antreas Themistokleous. I will be the host for today's live brief. As per usual, we're gonna go through what's happening in the markets, what economic data do we have coming up on the economic calendar, a quick view of the charts, and feel free to post your questions anytime during the presentation or live streams, not a presentation per se, but yeah. Before we begin, let me guys know where you're watching us from. Post on the chat a picture of your flag, or feel free to write your country and probably your name if you would like that. And we can get started. So, okay. All right. So, what do we have coming up this week? Before we do that, let's check on what happened last week, because from the previous week's live stream till this live stream, we had some interesting publications. First up, we had last week the Fed's interest rate decision. The expectations was for a hold at 375, and that's exactly what we got. Bank of Japan, Bank of England, the European Central Bank all had expectations of holding their interest rates as it was, and that's exactly what we got. We're gonna check on later on how that affected the different pairs and the markets in general. So quite an interesting set of data last week, and now this week, not much coming up. We had yesterday the Japanese inflation for February, which declined to 1.3%, and now for this week, the most important or market moving event, if you wish, is going to be on Wednesday, where we're going to get the British inflation rate, which is expected to remain stable at 3%. So no change expected there, but if we do get any surprise on the actual figure, any significant change from the expectation to the actual figure, then that will create some volatility on the British pound pairs. Okay. Hello from Casablanca, Morocco. Hello, Zambia. I'm shorting DAX. I risk what I can tolerate. Do you think it is a good idea? We're gonna go through. We're gonna check on DAX later on. Okay, so before we go on to charts, I want to stress that this is not an investment advice. This is my personal opinion. It is not a recommendation to trade anything. I do not. Exness is not to be blamed on any trade decisions that you decide to take after this live brief or during this live brief. This is just my personal opinion. This is a demo account that I will be showing. This is not real funds. This is a demo account. I will not be taking any trades, but still, this is a demo account for educational purposes only. All right. None of what I'm about to say about charts is a recommendation to take any action. This is just for practice, educational purpose. Okay, now going on to charts. Obviously, the talk of the town might be crude oil, right? Because we all see what's happening in the Gulf situation between USA and Israel and Iran. We have multiple disruptions of supply chains when it comes to crude oil. We also heard about the Strait of Hormuz, how important it is, and how does the closure of it actually disturbs supply chains around the world, and that's what we see exactly on the chart. So previous live briefs we mentioned about crude oil and how the price will keep on climbing unless we see a resolution or a ceasefire in the Middle East situation. Yesterday we had a big correction candlestick, and that's why, and that's because, of the Trump announcing that the USA will be in talks with Iran in the upcoming days to try and find a solution. But that statement was short-lived because 20 minutes after that, Iran officials came public and said that there are no talks going on, and this is just a trick, let's say, of Donald Trump to buy some time and think of the strategy going forward. So the markets were somewhat relieved intraday, but you see today we have a complete bullish day for now. You see there is no let me zoom in a little bit. There is no wick on the candlestick. You see, it's exactly from where it opened. It's pumping to the upside, right? We don't have this big volume in the day before the price moving up. That's what I'm trying to say. The wick is short. That means that this is a full bullish candlestick. All right. So my personal opinion here would be that the price of crude oil will continue climbing until we hear about a solution in the Gulf situation, right? There is no significant or big indication that we will have similar correction unless Trump comes and says something again, right? There is no indication that we will see the price continue correcting to the downside. Was Monday market a miracle or a trap? I don't understand the question, Joyce. Can you rephrase that? What do you mean? Was Monday market a miracle? Monday market for what? For which instrument? I like Exness execution and payouts and really fast. I recommend. Yeah, thank you very much. Day trading Barja, if I'm saying that correctly. Okay. On the price of crude oil, there is no indication that the price will continue lower or whatsoever. At least not lower than yesterday's intraday volatility, which the lowest was around 84. So anything below 24, I don't believe we're gonna get through. We're gonna get it anytime soon, unless we see a closure of the Gulf issue. ATR here shows a volatility of $7.26 intraday. So even with the full swing downwards from the 90.4, which we are currently in right now, the lowest it can go, it's around 83. So, and I don't believe we're gonna get that. So even if we do get a full swings ATR to the downside today, we're not going any lower than 84. So my short-term view on crude oil might be bullish, and especially now that we had a very strong bearish correction yesterday. I believe that we got a second chance, let's say, to buy crude oil relatively cheaper. I mean, compared to the previous weeks, where we had the previous couple of weeks where we were at $100. Now we're around 90. So I am pretty confident that I will be opening some long trades on crude oil, with targets, obviously, the $100. Okay, the technical image also supports the buying narrative, because we see here the moving averages are trading the 50. The green line is the 50-day simple moving average, and the blue line is the 100-day simple moving average. So when the faster moving average is trading above the slower one, that validates the bullish trend. Bollinger Bands are quite expanded. That means volatility is there to support any significant moves, and stochastic is in neutral. That means that even though we had a big bearish couple of bearish candlesticks, we still are not in oversold conditions. So that means that we do have there is the probability of significant moves to the upside. And the bearish correction yesterday, the big correction candlestick, gave us an opportunity to buy lower. Okay, now moving on, we have, before I go on to gold, let's check on the commitment of traders and see what's happening in the future markets. The EFIT funds is loaded. Let me reload here. I don't know why it's not opening. I'll try gold. Gold is opening. Yeah. Okay. So as we also see on commitment of traders report, we see that the commercial buyers, the big buyers, are declining. That shows that the price of crude oil has potential to continue moving up, because when commercial traders go down, the demand of commercial traders go down. That means that there is a commitment that the price of crude oil will continue getting more expensive, and that's why commercial traders are not quite keen on buying more expensive oil futures. So why am I mentioning that? Because that's another indication that we might continue getting higher prices for crude oil in the upcoming sessions. All right. Now moving on to gold chart, we see that the price has been massively declining for 2 weeks now, almost 2 weeks, since 10 days, 12 days of continued decline. Now, some people ask, why do we get declining prices for gold, since we have the ongoing war and uncertainty and all this fear in the market? Gold shouldn't be like a safe haven, an inflation hedge. Why is the price declining? And the main factor behind that is interest rates. It's the Fed's probabilities of hiking or holding or cutting on interest rates. Because you see the expectations of interest rates. Let's go directly to the end of the year, right? Let's skip through the end of the year. Yeah. So the expectations here, if we scroll down, last week, was 30% of holding and 41% having at least one cut, right? And if we go a month back, right, the majority of probabilities were for two-step cut, right? We had 33% chance of a 2% cut going to 3 to 325. Currently, that image shifted, and now the majority is expecting no cuts by the end of the year. So why is that important? Because if we don't have expectations of a dovish stance, dovish means that the Fed might think or start thinking of cutting down the rates, and that puts pressure on gold price. Why? Because when interest rates are expected to stay higher for longer, or there is an expectation of even an increase in interest rates, then big money flows towards the dollar, bond market, and not so much on non-yielding gold, right? Gold does not give out any returns. It does not have yields on it. So with higher interest rates, then bonds, the U.S. bonds become more attractive to investors, because now they get higher returns on their money, right? And instead of parking their cash, their funds on in the gold market, they prefer buying into the U.S. bonds. Let's check out also the yields currently. No, that's not the one. U.S. 30 year bond yield. So instead of parking meaning buying, right? It's not parking the car, which is also similar. So they prefer on buying into the U.S. bond markets, where we have these higher interest rates paid out, rather than buying into gold that produces no return, right? So that's the main reason behind why we have declining gold prices. Now, does that mean that gold is not as efficient as before? I mean, in protecting your funds in times of uncertainty or anything like that? No, it still is a safe haven. And actually, personally, I will be taking this opportunity of lower prices to buy into gold slowly until we get some signs of a reversal, right? Because currently there are no signs of significant reversals, at least. Yes, the price is testing the lower band of the Bollinger Bands, which is a sign of support, but it can continue to do so. You see that testing the lower band for quite some time. We have 1, 2, 3, 4, 5. This is the 6th session of the price testing the support of the Bollinger Bands and continued trading downwards, right? Stochastic has been in extreme oversold. Now it's in oversold. So even that the price is trading to the downside, we had, if I can remind you, a big, we had 2 waves of pump price, 3 actually, in the last 5 or 6 months. So no, that's August last year. August 3, 6, 6 to 8 months. We had 3 waves of bullish rallies. So one bearish correction phase is not enough to reach, average or fair prices. Okay, so the short-term direction of gold, given other things being equal, I do believe we might get some support around the 4,285, which is the 78.6 of the Fibonacci, and it's also the area of price reaction back in December of 2025. That's the medium-term low, right, of 2025. So there is some room still for gold to continue traveling to the downside. I mentioned earlier in our live stream that President Trump said that he's gonna stop energy destruction facilities for 5 days. So after those 5 days are done, we'll almost certainly get some type of communication by the U.S. president. So depending on what he says there, it's important to be monitoring the markets, especially gold and crude oil. So he might say, okay, we reached the solution and we wrap this up, it's finished. I don't think so, but he might say that. Or he can say there is no agreement, we continue more intensively or whatever, and then markets react accordingly. So what I'm trying to say here is that it might seem like a good setup or an obvious directional bias for the short term to be shorting gold, but unfortunately, Trump announcements tend to be moving the markets quite intensively, especially intraday. All right. Andreas, what's your take on community of traders, data and macros? Which one has more weight in real-time market? In this case, what will change the direction of gold? We talked about commitment of traders report. Usually, the commitment of traders report is kind of lagging. I mean, the data that we have here is for last week. You see here the latest reading is on 16th of March. Is not a leading indication, if you can call that. It's always data for the past week, but since it shows data for big money, commercial traders, producers, and all of that, it tends to validate rather than anticipate market moves, right? So I'm not relying on commitment of traders data to try to find what type of trade I will be taking. It's more to validate my theory or my strategy. What will change the direction of gold? The direction of gold obviously will be directly affected by Trump announcements, unfortunately, because it doesn't matter how much central bank demand for buying gold do you have. It doesn't matter how many retail demand or supply disruptions there are. Currently, at the time that we're living, the price of gold is greatly affected by the developments of this geopolitical conflict. I mean, even if we do have great demand by central banks, great demand by retail buyers, great demand by everyone wants to buy gold. If Trump comes and says, we're gonna start, let's say, invading Venezuela and attacking Canada, and we will destroy Mexico, whatever, right? Then the price of gold will crash. It doesn't matter what fundamentals there is behind. If Trump says, anything similar to what I've said, which is an exaggeration, obviously, and I don't believe that we're gonna get anything like that, but you understand my point there, right? Okay, now moving on to cryptos. Bitcoin. We discussed last week or couple of weeks before, then I was hosting again the live stream, and I said there is nothing interesting on cryptos, there is no volatility, there is no sentiment behind it, so we will get a continuation of the sideways trend. And unfortunately, I was right, and we still have sideways movement, still nothing interesting. We might expect or hope that the price might continue moving upwards and probably retest the 75,000 as it did last week, early last week. Yeah, 17. Okay, so but still, it's between 75 and 65. Nothing too major shifted. Obviously, if you're trading in a low time frame or you're scalping, you might find some good setups there. But Bitcoin being Bitcoin, right? You would expect a big moves to create some volatility. But as you can see here, ATR is plunging, right? It's in 2,890. That means maximum intraday volume. Not maximum, but an approximation. Is not absolute numbers, obviously. It's 2,890. So even if we do get that 2,800, we will be at around 73 something, 74. Still, 75 is looks like it's the ceiling for the time being. So if you had to trade Bitcoin, if I had to trade Bitcoin, probably I would be buying with a target around 75, which for some is sufficient profits, for some is not worth it, but it is what it is. For now, Bitcoin, there is nobody's talking crypto for now. You see, fear and greed index is in extreme fear. It's 11%. It's in the lowest bracket of the overall sentiment. Bollinger Bands somewhat expanded, I mean, compared to late February, but still we do have a lot of room for expansion. I mean, Bollinger Bands have seen better days. What I'm trying to say here is that volatility is not there yet, right? Sentiment is definitely not there yet. We are in extreme fear, 11% of sentiment. So most probably, I believe that we're still gonna get the bout that is between 75 and 65 in the short term. Yeah. Okay. Guys, feel free to ask for any individual asset that you want me to check. I will be going through some more, but if I don't cover or you want me to analyze any other instrument than the ones that will be showing, please feel free to do that. We had a question earlier about DAX. Was it DAX or yeah? Okay, let's check on what's happening on the German index. And day trading budget said, I am shorting DAX. I risk what I can tolerate. Do you think it's a good idea? Risking what you can tolerate, yes, is a good idea. Only what you can tolerate. On always trade or with money that you can afford to lose. That's the golden rule of money management, right? Now, if you are asking me if it's a good idea on shorting DAX, probably looks like that. Yeah, because the expectations of crude oil going up are higher than normal, right? I mean, most probably I believe we're gonna get higher prices for crude oil eventually, right? Because if you think about it, we have 24th of March, and the conflict started beginning of March, so we are probably 3 weeks into this war, into this conflict, right? The actual disruption of supply chains didn't reach the markets yet, because we had ships loaded with barrels that were en route to their destinations, right? We have the strategic petroleum reserves, which further adds to supply concerns. I mean, eases supply concerns, right? Yes, we do have elevated prices for crude oil for now, but if there is a continuation of the conflict, right, the actual effects of the supply disruptions will start hitting the markets hard, probably in the next couple of weeks, right? So if we do get increased prices on crude oil, and I mean increased above the $100 per barrel, that means that companies will be facing with higher costs, as we've seen with interest rates, higher costs of receiving loans for the business. So there will be an overall pressure on the indexes, not just the German, but also probably the Dow Jones or the S&P 500 or any other index, because crude oil affects all companies. Doesn't matter what type of company you are, crude oil will be increasing your costs directly or indirectly, right? So in general, I do believe that for the time being, it might be a good idea to be shorting indexes, right? And I hope that answered your question. Day trading Barilla. Okay. What's a good broker for a starter? I want to say Exness, probably. You can always test your broker by opening a demo account. Open a demo account, put a realistic amount of money inside. Don't put $1 million, but then you start trading with $100, right? Put the amount that you would be comfortable investing, either $100 or $1,000 or whatever it is that you can. Open a demo account with a broker that you will choose and see how they react. See their pricings, see their latency, see whatever you want to check it with a demo account before you put your money. And obviously, Exness is an excellent choice. That's what I'm saying. Okay. I hope I help. Gabe Jit. Hope I say that correctly. Your take on silver and Dow Jones. Yes, Joyce. I already mentioned about indexes in general, so Dow Jones is no exception. I do believe we're gonna get lower prices if the conflict continues, right? Because all of the companies that are included in the Dow Jones will be facing the same issues. And silver. Do I have this? I have it open here. Okay, silver on pure technical analysis, I believe that we might see a continuation to the downside, similar to gold. It's not. It is also silver. It is also a hedge against fear and inflation. Not to that extent as gold, but still has or follows similar rules. as gold. So I believe that we might see continuation to the downside. Of course, we might see first some bullish correction before a big swing to the downside, right? Because stochastic shows. Let me plot also Bollinger Bands. Yeah, in the short term for gold, silver, sorry, we might see some correction to the upside because it is testing the lower band of the Bollinger Bands and it's in oversold condition. So probably we might get a bullish correction to the upside. To what extent? Probably around $80 or even 90, which is the latest high here in mid-March. Before we see a continuation to the downside. If the conflict continues in the longer term, we will get lower prices on silver. For the short term, we might get some bullish action with targets around 80 or probably 85 to 90. That's my personal opinion on silver. Okay, so let's check on some forex pairs. Euro USD is on my radar for the time being. Probably we might get lower levels around 1.15500 or even 1.15, mainly because the expectations of the Fed show that we might not even get a single cut throughout the year. We've seen earlier how the probabilities of the Fed show that we will not be getting a cut until the end of the year. Excuse me. And that only makes sense because if we expect that the price of crude oil is gonna go up, right, and that in turn will create inflationary pressure, and we start getting higher inflation ratings by the US, right? Then that means that the Fed needs to step in and perform its duty, which is to keep the interest rates close to 2%, right? So the probabilities of cutting rates goes out the window, right? Now the issue is, when are we gonna get the first hike, right? And the probabilities of a cut are not there anymore, right? So we already have a probability of 18% by end of the year to even get a hike on the interest rates, but just 17% of actual cut, which I don't think these will disappear in the next one or two inflation data from the US. When we start getting higher inflation rates, which we will, right? It's only a matter of time of when we will have an increase, a significant increase on inflation data from the US. So when that hits the market, then expectations of the Fed of cutting rates will go to near zero. All right, and that's why on Euro USD I'm more confident on selling it rather than buying it. Because if expectations of higher rates for the US start hitting the market, that will greatly support the dollar, and obviously put pressure against the pairs traded against it. And that's why I am more confident on selling Euro USD for now. Okay. What else do we have here? Euro pound. Let me adjust the volume. I want to actually levels a little bit here. Yes. Okay. Euro pound, obviously, we said earlier that this week we have the British inflation. On the other hand, it does not, the expectations are for staying stable at 3%, and probably will not get that significant volatility, especially if the actual figure comes out at 3%. So nothing too interesting on euro pound. The stochastic is approaching extreme overbought, but with the yesterday's session being bearish, we might just keep on in neutral levels. The moving averages are validating an overall bearish trend in the market, and Bollinger Bands are starting to contract. That means that volatility on euro pound might not be that significant, so probably we might get some sideways action with a ceiling around the 86,800 and 86,400 for the upcoming sessions on euro pound. So nothing significant here to be thinking of doing. On the other hand, pound dollar seems to be reversing slightly for the time being, but I'm not yet convinced about the power of the pound. So I think that both euro pound and pound dollar might get some sideways action for the time being. What else do we have? Pound yen. Yeah, not very wise to start trading pound dollar yen, since around the 160 there was expectations of government, Japanese government taking action. We still didn't get any update. Obviously, last week we had the Bank of Japan holding their rates at 0.75 flat. So 160 might be somewhat dangerous area of trading, unless you are you are thinking more of shorting it. I mean, trading in terms of buying the dollar against the yen. If you're thinking of shorting it, you might get some interesting setups, probably in lower time frames, right? But it might take some time for you to reach your target, since you see that the Bollinger Bands have started contracting for the last couple of sessions, let's say here. And also moving averages are very close to each other. So we need to see if we're going to get a cross above or below the 100-day. Here we can see that the green line is the 50-day moving average, and the blue line is the 100-day. So we had a cross recently of the 50 below the 100, and that's why we get these big correction candlesticks. And currently we are waiting to see if we get a cross above, then obviously the price might even break above the 160. If it stays below, then probably we might start getting some reversal patterns forming up, and finding good entry points on shorting the pound yen, the dollar yen. Yeah. Okay. I think that's the majority of instruments that I have here. Let me guys know if you want any other instrument analyzed, and I can do that. Just post a comment on the YouTube chat, and I can go through the instruments that you mentioned. Let me go through the chat real quick and see if we have any new. Yeah. Okay. So no new suggestions. Okay. So let me go through what channels you guys can use to find out more information about the markets in general. You can find us on YouTube. If you just type Exness, you can find our channel, and here you can find all the playlists of the videos that we are producing. I would urge you to check on the trade of the week. Trade of the week is a series of weekly videos that we do every week, and we suggest a single instrument for you to trade. We give out targets, we give out the reasoning behind it. Of course, all of those are recommendations that you can follow for your trading, weekly trading. Okay. Now, the last episode was about euro pound with target around 87. It reached 86,800 and corrected slightly. It can still retest and reach 87. But what I wanted to show you here is that we also keep a score of our success rate. For example, if you followed every single trade of the week idea that we post every week, you will have 74% success. 40 ideas were successful, 14 were not. So 74 is quite impressive for the statistics and the number statistics lovers, or if you're interested in numbers, that's the success rate that we have on specifically on trade of the week playlist, right? So I think that's pretty interesting type of videos to watch, right? We also have some other playlists. We also have some podcasts that you can watch. Trading Talks is done by my team. You can watch the episodes and get updated on different concepts about trading, some strategy tips, for example, and stuff like that. You can watch the Trading Talks podcasts videos and any videos that Exness has. I'm just showing you the ones that we are involved. You can also find us on X. If you search Exness, we post there every single day about some data that we have. For example, when there is US inflation or NFP or central banks meetings or anything like that, any major events on the economic calendar, you can find details on the X account. We also post some individual charts and some description or review that you can watch or probably study deeper on your own. We are just posting some reviews on different charts every single day, and also you can find my personal profile on X. This is the username. I also post every week some ideas, especially on crude oil and gold. That's every single Monday I do that. So you can follow those articles on it's from TradingView, so you can read all about it there, and you can follow my profile on TradingView and read the ideas straight from there. Okay, let's go back to our chat and see if we have any Gold. Yes, gold we've checked, but let's go through that again. The daily Exness analysis are also a great guide. Yes, yeah. Thank you, Joyce. Okay, so what we've said about gold for the guys that are asking gold for now, probably you weren't with us from the beginning. So what we mentioned is that the price of gold is declining basically because of the expectations or shift in probabilities of the Fed to get some cuts by the end of the year. It used to be that the expectations of the rate cut was for 2 rate cuts until the end of the year. That was the data before the ongoing Gulf War took place. Currently, the probabilities are that there is no expectation of a cut by the end of the year. On the contrary, there are built up probabilities of actually a rate hike by the end of the year. And obviously, this data changes by the day, right? The probabilities of the Fed Watch tool is not constant. It changes every single day, right? So as we go along and we start getting future US inflation data, which it's highly possible to see the inflation data increasing. We most probably get a change on the Fed Watch tool, right? So my personal opinion on gold is that we might continue have declining trend at least until 4,285, which is the 78.6% of the weekly Fibonacci retracement level. Oversold conditions might continue into the upcoming sessions being into oversold. That's not a significant indication of a reversal to the upside. So my personal view on gold for the short term might be bearish. Okay, I hope I answered your question, Richard and Rod. Can't read that. Sorry. Okay. So yeah, follow us on our different channels that I showed. Follow us on YouTube. Follow us on X. You can also find us on Instagram and any other platform that you can think of. We're there. Feel free to like and subscribe so you will get notified first of any new pieces of content that we create, right? Thank you for joining me today on the stream. We can spend some more time if you guys have any questions, any instruments that you want to go through. Otherwise, we can wrap this up, end this session, and join my colleagues, my colleague Michael next week for next week's live stream. Okay. Since we don't have any new questions or recommendations or anything, I think we can wrap this up. Thank you all guys for joining me, and hopefully see you all next week. See you guys.